We're talking about safe havens, or at least theoretically safe havens. As it turns out, in this environment, safe havens are just not so safe. Gold, the Japanese yen, even the fiat-fighting Bitcoin have all plunged. Gold down 7% this year, the yen down 15% against the dollar, and Bitcoin, painful. Trading has been halted twice now in 2 days after the virtual currency lost more than half its value, again, just in the past 48 hours. So, when did safe havens become so dangerous? And more importantly, where can you run for cover? Well, our panel is here to help. Our closer, Michael Holland, founder of Holland & Company, Jim Rickards, Senior Managing Director at Tangent Capital, and markets author, Currency Wars, The Making of the Next Global Crisis. Also, and I told you we got a great panel, Axel Merk, founder of Merk Investments, and finally Tom O'Brien, author of The Gold Report, a weekly report on the trading of gold. Jim Rickards, let me start with you. You have been debating all over the Twitter sphere. You think Bitcoin is the most absurd thing you have ever seen, but you do like gold. Why the difference?
Well, gold's real, Bitcoin isn't. Look, I've studied Bitcoin. It's interesting. What's interesting is that the people I've met in person, leaving aside the internet or Twitter or whatever, who are really expert on Bitcoin, tend to be technologists. They tend not to necessarily know a lot about money. They know a lot about technology. I think they're attracted by the encryption and the algorithms and the distributed networking. There's some interesting kind of cool tech features of Bitcoin, but I mean, I don't see it as the anti-fiat. It's just a different kind of fiat. Paper money is a fiat. Digital money is a fiat. Gold is real. So I consider gold money, but I consider it completely different.
And you see gold still as a safe haven and a legit safe haven?
Absolutely. Look, it's around 1550. It's the third time it's been down to 1550. There is a floor. I call it the Chinese floor. The Chinese are out to buy 2,000 more tons. Of course, they do it secretly. They use their intelligence and military assets and agents at HSBC and elsewhere. But but they're smart buyers. They buy the dips. I know it's a cliche, but the Chinese are pretty smart about it. So when it gets down to that level, it finds a bid from the Chinese, and then it goes back up again. It'll go up a lot, not right away. Two of the things you mentioned, Adam, are related, which is the yen and the gold. Because I remind people, gold is actually up 20% in yen. In other words,
because the yen has gotten so crushed.
Well, gold, right? But gold's a kind of currency. It's a kind of money. So when you say what's the price of gold, you have to say compared to what. Now in dollars, it's flat, but in yen, it's up 20%. That's because the yen's going down.
Understood. Right. Understood. Tom O'Brien, you've got the weekly report, the Gold Report. What's your take on what's happening right now in gold?
Nice to be with you, Adam. To me, gold. We're at that 1550 level, right? The pressure on gold for the last 2.5 years has been incredible. GLD, sixth largest owner of gold. Each and every that was awesome when gold was going up, because every time the future market would go up, GLD would have to buy more physical gold. Gold's been going down for basically 2.5 years. It seemed the actual physical gold, it's only off $400, but the pressure has been incredible. So what ends up happening each and every day now, if the futures are down, the physical gold has to get sold. When Jim just brought up China is a small buyer of gold. They're not even in. To me, they're not even in the picture.
Small buyer of gold, Jim.
Yeah.
Jim, what are you saying here?
It's tiny in the context of how much gold is swapped every year. Okay, it's a blip. And
Jim, you want to take the other side of that?
Out of China.
Sure. The price of any market. The price of any market is determined at the margin. China's producing 350 tons a year, world's largest gold producer. They're importing 350 tons a year, world's largest gold importer. I agree that those are small relative to the total gold market, but again, prices are determined at the margin. They're the marginal buyer, and more to the point, they're out to buy another 2,000 tons because they've got to get on a level playing field with the United States and Russia.
2,000 tons. They'd have to buy 10,000 tons, okay, to even get close.
No, if you look at gold at the market, if you look at gold at the market to GDP, they need about 2,000 tons to be equal to the U.S. and Russia.
Axel Merk, jump in here, Axel Merk.
Watch
Tom, we got a lot of guys here. Axel Merk.
Exactly.
Go ahead.
Hi, everybody. Well, a couple of points here. I think one of the reasons gold is taking a breather here is because the folks who thought the Eurozone is going to fall apart are getting out of gold, and the folks who realize there's too much debt in the world and most countries in the world will deal with it with inflation are only starting to get in, and so we're having this breather. But let me make a brief point about Bitcoin. Right now, it is a phenomenon. It's not really a fully-fledged currency. But as Jim points out, it's an interesting technology platform. It shows that people are disgusted with fiat currencies. And the one idea I have, well, why don't Jim and I, why don't we team up and create our own currency backed by gold and use Bitcoin as a technology platform? I think there's something that we could run with.
That's what we told the Pentagon in 2009 at the war game down at the Applied Physics Laboratory. So that may happen yet.
Yeah, it may indeed. All right, Michael Holland, always the voice of reason. Maybe you can make sense of what's going on. Safe havens, whether we're talking Bitcoin, the Swiss franc, gold, it's hard to find a place to call safe right now.
What happens with just about anything when you get the one-way decision-making, in the case of gold, for example, up until 2 years ago, Jim knows as well as anybody, 2 years ago, everyone was a winner in gold. And they just said, why would you buy anything else? They talked a lot. I even bought some GLD, and the moment I sell it, that gold price will go up. But I'm not selling it yet, so just be prepared for that. Now, having said that, I think Bitcoin is the best example. Jim and I were talking before the show. They closed the exchange. I mean, that's
frightening.
That is frightening. So this was something that went from 0 to 250 and now to 1. Who knows where it is because there's no trading in it. But you get these crazy prices. Anyone remember the .com phenomenon? And anyone remember tulip bulbs? I was there. The reality is that things can get bid up to crazy levels. Gold actually got bid up an awful lot. Whether it was crazy or not, I think it probably was. Probably when I bought it. And then you have Bitcoins the same way. Just about any of the safe havens, including treasuries, over the last few years have bid up to unreasonable positions.
Axel Merck, where have you been hiding these days? And I'm not talking about on the screen. I'm talking about with your money. What's your #1 safe haven, and does it even exist?
Well, I think the one message throughout of this is there is no place to hide. There is no safety, and particularly the dollar is not safe either. Your purchasing power is at risk, so you have to diversify. Gold is a component in that. I wouldn't use Bitcoins, but the reason why the yen is no longer the safe haven is because their current account balance is eroding. If you look in 2008, everybody fled to the yen. It was more popular than the dollar. They had a current account surplus. If you correlate the yen versus the VIX index, that has been eroding almost in parallel with the deterioration of the current account balance. We think the yen is going to be worthless because they're getting much more than they're bargaining for. And once you have a current account deficit, all this debt is going to blow up in your face. And so that is why the yen is no longer a safe haven. But the place to hide is, well, you can short the yen, you can buy some gold, you can diversify to basket of currencies. And indeed, one of the places everybody hates is the euro that still is very cheap compared to everything else. The reason I mention currencies here in general is because they're much less volatile than, for example, equities are. It's great when the equity markets go up, but should Bernanke catch a cold, the equities are going to be under severe pressure. So you want to be defensive, but cash in dollar is not safe either. So you need to diversify. Embrace there is nothing safe anymore. Throw out that risk-free component in your portfolio.
Tom, you're hearing the panel make the case for a lot of assets other than gold. Where else would you want to be? Granted, you're the author of the weekly gold report, but where else would you want to be for safety?
Well, you know, it's wild. I've had the gold report for 12 years. So we've ran gold from 282 to 1900, okay? But the bottom line is that when Alex just said the dollar's not where to be at, the dollar bottomed at 70. The dollar's at 83. The dollar's going to 89. So check it out. Okay, everyone doesn't want the dollar. The whole world wants the dollar. Last year in the world, there were more dollar bonds issued by sovereign countries than ever. You know what that means? They have to buy dollars. They have to pay the interest in dollars. You take a dollar,
but
you
by
buy
the way,
real estate in the United States.
Tom, let's just think about that for a moment.
You buy real estate in the United States, and what ends up happening? The real estate's going up. The dollar's where it's at.
And by the way, if that is in fact the case, if the dollar's going up, by definition, Tom, that means gold's going down.
That's right. I think the dollar's going to 89. I think gold's going about 1350. 5 years from now, yeah, we'll see gold at 2,000, but it's going to be a time issue. The run has been extraordinary. The Armageddon's over. Selling fear is over. It's over. The United States, the dollar
I couldn't
is where
disagree
it's at.
with
That's where people want to be.
Yeah, I'm with Axel.
We never had a Eurozone crisis, but we do have a global crisis. Look at what's happened in Japan. Look at Carney going to the Bank of England. We have too much debt in the developed world, and Eurozone, they like to default, they like austerity, but the rest of the world is going to inflate the way around it. And sure, you try to get the timing right in gold going to 2,000. I'd rather buy it now.
The rest of the world, Alex, is coming right to good old USA.
But that's because we have nominal gains.
And it's coming back. It's not only coming back.
So the rest of the world,
totally where it's at.
Tom, your point clearly bought out by the numbers. The rest of the world coming to the U.S. Jim Rickards,
Yeah,
Jump in here.
You don't actually invest in dollars unless you're a futures trader or a currency trader. You invest in dollar-denominated assets. That could be stocks, bonds, real estate. It could be a lot of things. Right now, there is a flight to dollars because our stock market's going up, but this is because of money printing by the Fed. They're inflating another bubble. It'll crash. Not this year, by the way. I think stocks will do fine this year in nominal space, but in real space, they're going to crash, probably next year or the year after. So, yeah, there's a flight to dollars, but only because the Fed's printing them and nominal prices are going up.
Now, as I hear all four of you,
people all over the world want dollars. They're using dollars. They're buying real estate in the United States with dollars. This is like it was in '74 to about '80.
And how did that end?
Any country,
the dollar almost died in 1980.
Any country, and they wanted the U.S. dollar.
That's right. And how did it end? How did it end? We had 50% inflation.
What do you mean? How did it end? It ended up great.
No, it didn't. From 77 to 81, we had 50% inflation.
Than we were 20, 30 years ago.
All right, Axel, last word. Axel, last word. It's not easy here, guys.
The 1970s were quite fine for gold. It didn't go so well for the dollar for a long time. We're going to be in a very rough period.
I'm talking about 1970, the average pay compared to now. We get it made now. Yeah. Average pay in 1970, if you were in the service, I was in the Marines making $100.
You have
now you're making $1 million.
You have to distinguish between real and nominal. Yeah, nominal, it's way up. But in real terms, there's no income growth in the United States. 50 million on food stamps.
Oh, what are you kidding? Oh, my God.
Okay, Tom, I can tell we're going to have to do this again.
The cities are 10 times better off.
Tom,
the rich are better off. The rich are better off. The average Americans are not.
Tom, to be continued. Jim Rickards to be continued. Axel Merck to be continued.
Great one. Have a safe one, guys.
All right, guys, that was fun. Michael Holland, you are, of course, staying with us. One of the more spirited debates we've had here on Bloomberg Television. That was fun, wasn't it?